folks, it is that time of year. Yes, it is that time of year when everybody starts predicting if there's going to be a stock market crash in the upcoming year or not, and what's people's opinions on that. And so we got a real interesting one here today out of JP Morgan and what they're saying about a stock market plunge in 2022. And I want to give my perspective on if I think this is realistic, unrealistic, and those sorts of things. But yeah, I saw this headline. I was like, we got to talk about this. Don't fear a 20% stock market plunge, says JP Morgan. So yeah, I'm going to talk about a few points on a few things I see coming here that I think maybe JP Morgan doesn't see coming. And we'll talk about it from a few different perspectives. So I hope you guys enjoy this video as always. Also, first time ever I shouted this out. We have a massive options masterclass coming in January. Coach Hubert's been in a cave for like the past 6 months, just working on this beast masterclass of like 100 videos teaching every option strategy pretty much out there. It's epic. That's all I can say about that. It's epic. So if you want to be notified as soon as that masterclass drops, check out pinned comment down there. Also first link in the description, and put in your name, email, and as soon as that drops in January at some point, we'll send that over to you. Alrighty guys, so let's get into this. All right. So don't fear a 20% stock market plunge, says JP Morgan. Some reassuring words on our record-setting markets into the new year from JP Morgan strategists. First off, I disagree with that statement, okay? I disagree with that statement. I think a lot of us that are in the stock market, we see something like that and we get more fearful. We're like, wait, JP Morgan says there's not going to be a 20% stock market plunge. That means there's going to be a 20% stock market plunge, right? I think we feel more reassured if JP Morgan was out here saying, oh, stocks are going to crash 20%. They would be like, to the moon, okay? So it's just funny how that works. A little reverse psychology, I guess you can say, okay? As far as what they're saying here, quote, in particular, outside of the Big 10 stocks in the United States, equity drawdowns and multiple deratings have been severe. Russell 3000 was down only 4% and NASDAQ Composite down 7% from 12-month highs. However, the average drawdown for constituents in these indices was 28% and 38% respectively. Some argue that this price action of a late cycle dynamics, or at least an intra-cycle of a 10 to 20% market correction. In our view, conditions for a large sell-off are not in place right now given the already low investor positioning. Record buybacks, meaning companies buying back their own shares, which puts a massive buyer, because some of these companies, they buy, I mean, look at Apple. Holy smokers, that ain't no jokers. When they buy, okay? Like tens of billions of dollars at a time. It's epic. Limited systemic amplifiers, all right, and positive January seasonals, said JP Morgan chief macro equity strategist. I won't even try to pronounce their name, okay? New research on Monday. So, the S&P hit an intraday record early Monday session as investors bid up stocks despite the rising Omicron-related infections globally. By the way, those numbers are going to continue to climb the next several weeks. I expect them to start dropping in February and then continue to into March in the springtime. I expect numbers to go down massively. But for now, it's going to be, pretty much record numbers I would expect for the next several weeks, okay? Gains were fueled by upbeat holiday retail sales data out of MasterCard spending pulse. If the S&P 500 closes at a record, it will mark the 69th time this year the index has hit a record high. And by the way, S&P 500 is super heavy to certain stocks. The S&P 500 has notched a record close on nearly 30% of trading days this year, according to Bloomberg. Thank Apple stock for that, okay? Apple and a few other stocks. Thank them for that. Meanwhile, 26 out of 30 components of the Dow Industrial Average were in the green, paced by gains of Home Depot, Cisco, okay, and Yahoo Finance's Company of the Year, I guess, Microsoft, Mr. Softy. Traders also nibbled at high multiple tech stocks such as Nvidia, which held down the spot of the top trending ticker on Yahoo Finance platform for the most of the session. With momentum in the markets persisting, despite numerous macroeconomic and health concerns, JP Morgan strategist says investors should stay on basically risk on mode. He says, we find the current setup very attractive for high beta stocks, emphasizing both sides of the barbell. One, on the value cyclical side, in particular, reopening stocks such as travel, leisure, hospitality experiences. So think about companies like Wynn, think about companies like CCL, the other cruise operators. You can even think about maybe airlines in there a little bit, and energy on the secular growth side. You could think about something like Hawaiian Airlines, HA, or something like that. that. On the secular growth side, various high beta segments such as payments, e-commerce, gaming, think about Corsair, cybersecurity, biotech, have already seen multiple, basically derating, 30% to 70%. Yet fundamentals for many of these themes remain intact with continued strong secular growth for large addressable market sizes. Historical analysis, 30 plus years, shows the largest outperformance of high beta stocks tends to be in January. That's important there, guys, okay? It tends to be in January, i.e. tax loss harvesting's over, right? Investor bottom fishing, the analyst also writes, okay? Which is something we talk about on the channel all the time, especially recently in regards to, everybody just tax loss harvesting, especially on stocks that have gone down a lot, and those stocks performing well in January, okay? And so, I think there's a few things we got to talk about here, and I want to pull up some charts and show you guys some numbers, okay? Now, the first thing we got to understand is the market is driven by big dog stocks, right? That's what drives the indexes. That's what drives the S&P 500. That's what drives the NASDAQ, the top 10 biggest market caps out there. They drive this market. Apple drives this market. Amazon drives this market. Facebook, Microsoft, Nvidia, Tesla, Google, those sorts of companies, they drive this market. They're what really dictates. And then the big, huge financials such as JP Morgan Chase, okay? Those sorts of stocks run this market. And if those companies are thriving, okay, if those companies are thriving, meaning their earnings are going up in a substantial manner, their revenue, their net income, all those sorts of things, right? And if there's also belief, the psychological side, right? There's belief that those companies are going to continue to thrive in future years, the whole market rises, right? At least as far as the S&P 500, the indexes rise. Now, when those companies either get overvalued or you get into a situation where their growth rates slow in a major way, that's when you start having some things come down. Or if there's just an overwhelming fear out there in the market, right, for big tech. And what we've seen in the market over the past 6+ months is we've seen fear in the market. But not fear for the big dogs, fear for small caps, right? The massive amounts of inflation that have been going on have really been killing a lot of stocks. Everybody's piled out of anything that is a non-profitable company, as it seemed like for the most part. And the big dogs, they're profitable. Those are very, very profitable business models, right? And so there's been a kind of a pile up into the biggest companies, right? And it's kind of been an exodus of the smaller cap companies. And that's why you've seen so many stocks fall 40, 50, 60, 70, 80%. And people are like, how is the market doing so well? It's because just the big dogs are holding the whole thing together, right? And if it wasn't for those big companies holding this whole thing together, the markets would be down substantially from where they're at. But because those big dogs are holding things together, well, they're going to continue to thrive, right? And if we think about the upcoming quarter, what do you really have to fear for the big companies, okay? I think there's a little fear that we're going to talk about in just a moment for those stocks. But in reality, for the numbers, let's think about Apple's latest quarter, right? Their October, November, December quarter. Okay, do you think the numbers are going to be strong? More than likely, yes. They're likely going to be pretty dang strong, okay? And the expectations aren't huge. If we think about Amazon, you think Amazon had a great quarter? Yes, of course they had a great quarter, okay? Amazon's numbers are going to be terrific. How did Google do with Google and YouTube and everything else they own? I'm going to guess pretty dang good, okay? How did Facebook do with Facebook and Instagram and everything else? I'm going to guess pretty dang good, right? And so all those companies are likely going to post up good numbers, okay? And so if you think about it from that context, there's not a ton to fear out there. When you think about a lot of these big companies, Nvidia, yeah, they're going to be there. Tesla's booming right now, okay? And so there's not a ton to fear about from that point of view. However, there is stuff to fear about here, okay? So obviously, large caps have been trading rich recently. We know that. So I think that's something you can at least fear a little bit, right? Small caps, definitely not the situation. By the way, Yardini needs to get it together. I guess they're on a little vacation here, okay? They're lagging like over a week on their numbers. Almost 2 weeks now they're lagging on their numbers. Maybe I just got the old report, but Yardini, come on, take off, get back to work, man. Small caps have been trading really cheap. S&P 600 small caps. We talk about that all the time on the channel. If you watch this channel religiously and you're subscribed, thanks for being here. We talk about that all the time. We talk about large caps have been trading really rich, okay? So we know that's something a little bit to fear about. Now, I think there's something else to a little fear in relation to the large caps, and if you're a little worried about a major drop at all in the market, okay? That to me is coming from the point of view of these stocks have been great, right? Apple and the whole bunch, right? They've been doing tremendous. All those stocks are near 52-week highs. And if this continues to climb, right, which is pretty normal for these stocks to continue to climb at the very end of December and into January, right? If that continues to play out, I think there's a decent amount of folks out there. And when I say folks, I'm talking about smaller investors. I'm talking about higher net worth investors, right, that have millions of dollars in the market. I'm talking about even funds that are going to look to cash profits in some of these stocks, that are going to look at them and they're going to say, there's just not that sort of opportunity in some of these stocks to really see rapid rises over the next, year or so, right? Think about that from Apple's standpoint, right? Apple's trading already at a very rich PE ratio. Is Apple really going to climb a ton in the next year? Probably not. Like, if I had to guess, I would say probably not. If anything, Apple will be up slightly, I would expect, in 22, or down in 22. That's my personal opinion. It might not come true, okay? That's my personal opinion on kind of what I see. And so I see a lot of folks looking at this, and come January into February, they're going to be looking and they're going to say, I want to deploy some money in some of these beaten down dog stocks and start to play some of those, okay? Now, why not sell in December? Well, if you sell in December, then you got to pay taxes right away on that money, right? Come this tax season. If you wait till January, then you can play with that money for a whole year plus, right? Hopefully make that money into a bunch more money, and then worry about your taxes come March or April, right? April, because everybody does it last minute, April of 2023, right? And so I think there's a risk that some of those stocks could sell off a bit. Do I see those stocks crashing in any major way? No, absolutely not. But do I see those stocks potentially selling off in a rotation of money? Abso-dang-lutely. And when you add up all the pieces, it makes sense, okay? And the thing that happens is when these stocks start to sell off, it starts to become more of a self-fulfilling prophecy, where other investors look and they're like, oh shoot, Apple all of a sudden dropped 3%. Oh, it's down 5% now from where it was. Maybe I should go ahead and take my profit because maybe this baby is about to go down 10% or 15%, 20%. So you all of a sudden get this kind of influx, right, of people kind of selling, and that reinforces selling. No different than what we saw play out with the small caps. Small caps are just dramatic, right? When those ones start falling and people start selling, the selling just compounds in a massive way. That doesn't happen with a stock like Apple. That doesn't happen with a stock like Google and those sorts of stocks, okay? But a 5% move down for those stocks is huge and hugely negative for the market, right? And a lot of funds and a lot of investors that have significant amounts of money. That to a fund can end up being, a 5% downward move could be in their funds down tens of millions of dollars or hundreds of millions of dollars, or dare I say billions of dollars, right? Depending upon how much money they have invested in it. So that's something very important to kind of keep in mind there. And then they say, okay, let's deploy some of this money into maybe some of the mids or some of the smalls if they can play some of those stocks, right? Or maybe even into some of the larger cap stocks that are beaten down, like a PayPal, like a Square, and some of those stocks, right? And where they're looking at PayPal, they're looking at Square and like, well, the stocks are near 52-week lows. Apple or this stock's at near a 52-week high. We think this stock's going to perform much better than this stock. They go ahead and they sell out of that stock to deploy the money in the other stock, right? And so this is when you can get a market to, either stagnate for a bit or even downtrend for a bit, even if those companies still report good earnings, just for the mere fact that people are rotating money. And like I said, when I say people, I'm talking about small investors, big investors, and funds as well, okay? And that's what you call a rotation of money. And you have rebalancing of portfolios, which is something that happens in ETFs all the time. Rebalancing is a massive thing, and that can definitely start to play out in January, okay? If you ever track Cathie Wood stocks, okay? If you go to cathiewoodstocks.com, which is a website that I have essentially that just tracks Cathie Wood's top 25 stocks in her ARK portfolio on a daily basis, okay? And if you're somebody that tracks Cathie Wood, she's always selling stocks, buying stocks, and even stocks she loves, because she's doing what's called rebalancing of the portfolio, rebalancing the ETF to certain numbers, okay? And so all of a sudden you'll see her buy Tesla and then sell Tesla and then buy Teladoc and then sell Teladoc. Not the whole thing, but just like smaller portions of it, because it's rebalancing, okay? And this is something that happens in ETFs and funds all the time. They do what's called rebalancing, where they'll sell a chunk of these stocks here and then they buy a chunk of these stocks here, and they're rebalancing their portfolio. And a lot of that could play out in January, okay? And so needless to say, do we have a systemic risk of like a stock market crash? It doesn't really add up right now, but could we see a stagnating S&P 500 or a downtrend? It's certainly possible, okay? It's certainly possible for the reasons I just spoke about in this video, guys. So anyways, let me know your opinion in this comment section. I would love to hear from you guys as always. Thanks for being subscribed to this channel. I appreciate you guys. Much love as always. And other than that, yeah, have a great day.